everyone, welcome to Stock Market Today. It's Allie Corman, Ken Shreve here with a breakdown of the action in today's session, where we saw strong gains across the board, and we had some tech stocks to talk about today, Ken.
Yeah, I'm trying to think. The last time we have discussed three tech stocks in one show. It's been a lot of oil and gas and agriculture, but yeah, we're going to take a look at three tech stocks. Ironically, it was only the S&P 500 that followed through yesterday to confirm a new uptrend, but nice gains again on the NASDAQ today. So we'll take a look at Pure Storage, PSTG, a stock that has been holding up very, very well, even when the NASDAQ was going down. Also, two chip stocks, believe it or not, Axcelis Technology, ACLS, and also Alpha and Omega Semiconductor, two chip stocks that many people probably never even heard of, but look pretty good here.
Yeah, unless they've been following us, AOSL. But yeah, we'll take a look at those. But first, let's take a look at the major indexes. So today, the NASDAQ gaining 1.3%. The S&P and Dow not too far behind that, up 1.2% apiece. We also have the Russell 2000 up about 1.6%. So continuing to make strong gains at the third session in a row here, really. But like you said, didn't get the follow-through day of the NASDAQ because we did get that undercut 4 trading sessions ago of that late February low. So this would technically be day 3 of the NASDAQ's rally attempt, but great to see us above that 21-day line. Would be even better to see us stay above that level.
Yeah, absolutely. And for the NASDAQ, it's the third straight session, Tuesday, Wednesday, and Thursday, where we close near highs. So instead of these strong opens and weak closes, we've been getting sometimes a weak open and a strong close, sometimes a decent open and a strong close. So three days in a row where we've closed near session highs. We'll see how the NASDAQ acts if it does eventually approach its 50-day moving average, which it looks like it's going to do. It was interesting yesterday when the NASDAQ was up big. Breadth was actually less than 2 to 1 yesterday. Breadth did improve a little bit today, close to 3 to 1 on the NASDAQ. Even better, almost 5 to 1 on the S&P 500, winning stocks beating losing stocks. So nice to see breadth improve here.
Yeah, and a look underneath the surface, we're going to be focusing on technology stocks in this show today. But what we saw in the session was, as you mentioned, improving breadth with not just technology. You had your steel and your miners and some oil and gas names looking good as well. So it seems like that gives a little bit of confidence, in this early rally here.
Yeah, kind of a mixed producer for the steel mixed, I should say, performance for the steel stocks. We kind of had a weak earnings guidance from Nucor, pretty good guidance from Steel Dynamics yesterday. So a lot of stocks up in the steel group. Nucor down just a little bit, but yeah, the breadth is improving, and again, all the discussion recently has been these oil and gas stocks that have been outperforming, and like you mentioned, the miners had another good day today. Just good to see some tech stocks starting to participate here.
Exactly. Let's also take a quick look at the S&P 500 and Dow here. So the S&P getting awfully close, Ken, to that downward sloping 50-day line. The last 2 times it did that, it got turned away. So it seems like a key level here to be keeping an eye on.
Yeah, and listen, it's very possible it could happen again. That's not necessarily a bad thing. If it gets turned away at these converged 50 and 200-day lines, we'll hope to see some light volume behind the decline. Hopefully, not too much volatility behind the decline. The other thing is that institutional money could continue to flow into the market here, and we could power right through those two lines there. So the S&P 500 is definitely the stronger index, I think, right now when compared to the NASDAQ. So wouldn't be surprised to see it get turned away when it gets close to those moving averages. But if it does, and this market uptrend is for real, it shouldn't take long for the S&P to plow right through there and continue higher.
That's right. We're keeping a very close watch on that. And also a look at the Dow. It's also getting very close to its 50-day line. And small caps, look at the Russell 2000 ETF IWM. It got above its 50-day line today, Ken.
Yeah, and look at what it did when it went up to about 227 several weeks ago. It went right up to that 50-day moving average, got turned away when it was in the yeah, that's it right there when it got turned away in the throes of this correction. So to see the stock close above the 50-day line today is a positive development. So improvement in all the major stock indexes, seeing more and more good action in the individual stocks. So we're not going to go full bore all out bullish here, but we're very encouraged by the action in the market the past 3 days, and again to see breadth
Mhm.
improve, that's a good thing too.
Yeah, we'll take it. And now a look at PSTG Pure Storage with a gain of about 6.8% today, a strong finish here. It didn't quite have a technical handle because it wasn't long enough, but it seems like that recent resistance investors could have keyed off of in terms of buying the stock today.
Yeah, I mean, typically when a stock starts forming the right side of the base and starts moving higher, it can drift lower, which Pure Storage did a couple different times. But we typically like to see a handle form for at least a week. So Pure Storage came up short here. However, I could easily see how some traders might have taken a small position here because it broke out over its recent high that you just noted there. So this is. This is a stock where, as it approaches that 35 level, again, it would not be surprising for it to drift lower here.
Right.
Ideally, if you don't own the stock yet, you could get a legitimate handle form here on the daily and the weekly chart. And I just like the fact that this is a stock that continues. All three of the tech stocks that we're going to talk about today have relative strength lines on the weekly chart and new high ground. So they're strong stocks, acting well, flexing their muscle, and Pure Storage could have more gains ahead. We'll see.
We'll have to see. And while it's not in the top quartile of IBD's groups just yet, the computer data storage group sits at 118 out of 197. In addition to looking at those top groups, we also like to see group rank improve. So is that something that you're keeping a lookout for, Ken, with some of these tech areas starting to come back to life,
Yeah,
perhaps?
I mean, definitely. I mean, that's the one yeah, mark against Pure Storage now is a weak industry group rating. But names like Micron and Western Digital, they've all been hit pretty hard, which has hurt the industry group ranking here. But when you see a stock like Pure Storage clearly under accumulation here, again, this stock was when it gapped up on earnings. This was right in the middle of a very not great time for the market. Nasdaq was going down. You can see when Pure Storage initially gapped up, it couldn't hold the gains, but it has continued to work higher. So it may be the lone wolf in the group right now, but the relative strength is hard to ignore.
That's exactly right. Okay, and as promised, to look at two chip-related names. So here's ACLS in the semi equipment group, tacking on 3 days in a row of strong gains, topping a 75.10 buy point today with a gain of almost 5%, some above average behind the move, not only today, but yesterday as well. And also, it seems like if investors were to have drawn a trend line within this base, yesterday even could have been an opportunity to sneak in before today's traditional breakout.
Yeah, that is definitely true. I mean, you had a buy signal, probably late in the session yesterday, but Axcelis did follow through. A lot of damage in the chip equipment group. Again, you've got a weak industry group ranking here, so a lot of your mega cap names like Lam Research, Applied Materials, KLA. These stocks have really been beaten down, but Axcelis, pretty clear buy point here. Could have had an early entry yesterday, like you mentioned, but it's sitting right around that 75.10 pivot point, and still in buy range. We'll see. We'll see how it trades tomorrow. But another stock, under accumulation and bucking the trend in an overall negative environment in the technology sector.
That's exactly right. And let's also take a look at AOSL, Alpha and Omega. This is in the Fabulous Semiconductor group, along with the likes of AMD and NVIDIA. But AOSL has definitely held up much better than its two more high profile names, Ken. And what do you think about how this handle is shaping up?
Well, it looks okay. I mean, again, it's another one with just a very clear, identifiable pivot point here. 59.38, add 10 cents. 59.48 would be the buy point. So this is a company that makes power management chips for things like notebook computers, smartphones, even some appliances. Kind of a niche market that has really turned profitable for AOSL. So again, three straight gains right along with the Nasdaq and getting close to that 59.48 pivot point. Outstanding fundamentals. Another one to watch in the chip sector.
Mhm. Yeah, and I think maybe one concern for investors, Ken, at this juncture would be given the fact that the environment right now is so headline driven and tied to, war abroad, inflation and interest rates and things like that, that buying into strength, is that something that's going to work? Because now we have seen 3 strong days of gains. Is that going to stick? Is buying into strength going to be an okay strategy going forward, or should investors still be playing things a little more conservatively?
Well, I think again, when if you like what you see in AOSL or ACLS or PSTG, three of the stocks that we're talking about today, just nibble to start, because you're right. We don't know where the market is going. We know we got a sign of strength yesterday from the S&P 500. We know that overall market environment seems to be improving. So if you want to nibble in technology, because again, we've talked about the damage that's been done. I mean, Nvidia, AMD. I mean, some of the real heavyweights in the semiconductor sector are still damaged goods at this point. So when you see names like AOSL and ACLS outperforming, just start small. It might be a 2 or 3% position. So if the market tells you you're wrong, you're not going to take a big hit. So I think in the chip sector, these are two good names to watch. If we go to the weekly chart for AOSL, one caveat here is that it's arguably, some might call it a third stage base. I would actually argue it's second stage. This big long base that the stock formed right there, that was a pretty good long shakeout, and probably was enough to reset the base count. So I would
Mhm.
call AOSL second stage. The other one, ACLS, the weekly chart, I mean, that's pretty clearly a third stage base, which we consider later stage, but it still could work here for sure.
All right, Ken, great things to think about as we close out the show today. And thank you all for tuning in. We will, of course, be back tomorrow morning on IBD Live, and it's Friday, so we've got a special guest lined up for you, and that is Dan Fitzpatrick of StockMarketMentor.com returning to the show. So it'll be great to get his take on market conditions and stocks that he has his eye on. So make sure you tune in, investors.com/IBD Live for all the details. We'll see you then, and we'll also see you right back here tomorrow after the close. Bye, everyone.